First things first, as usual, heading on to forextradingasia.com, looking at the economic calendar here. Today being Thursday, what do we have? We've had a bond member speaking from the Bank of Japan. It hasn't done too much in terms of moving the yen prices, but later at 2:30, from 2:30 onwards, we do have the Swiss franc with a lot of retail sales number, CPI number, GDP numbers to be released. All right, so as I told you, I'll be talking about currency pair. I will be showing you a brief insight into the Swiss franc and into why it's not one of the pairs that I focus on a lot or entirely. Okay, so this is one of the reasons. I'll tell you more about that shortly. What else do we have tonight? We do have the jobless claims number. I've told you that it's a weekly number, so not a big change in terms of expected and previous. So I don't think this is going to move prices too much. We do have some other US numbers, Canadian building permits, followed on with Friday's yen services PMI. I wouldn't care too much about that. The Japanese PMI numbers are not a big price mover based on my previous analysis and experience. So what you're going to look at is on Friday, the main thing is we've talked about the euro and the pound. The main thing is back to the US non-farm payrolls number was 943K, expected 750. So we're looking at about a 7 something. I would even think that we might see a 600 something number there, with average hourly earnings at about a 0.2 to a 0.3% and unemployment rate at a 5.2. Putting my neck out there, doing some projections in terms of data, but with all that put together, what we might actually see is a little bit of US dollar strength being applied from today and tomorrow onwards. What this means is on the US yen here on the H4 time frame, I could anticipate that we might see today the US yen still coming back down a little bit, testing that 109.76 support level before possibly during the non-farm payroll pushing it back up again. I don't think in this case, I don't think it will go back up towards the 110.65 level. I think this week's high would be a good point to target. So what you could be looking for as an opportunity is for it to bounce off. If this 109.76, you could be looking at about 109.86 with a 20 pip stop loss for a good 50 pip take profit level. You're looking at above 1:2 risk reward ratio towards the upside on the US yen H4 time frame. Why in this case I haven't decided or haven't thought that it would go all the way towards 110.65 is because, like last week's analysis here, we've seen that move, that pattern pretty much apply, but it hasn't been applied in that great an extent. We did see that drop down, we did see that bounce, we did see that retracement again. You can see the patterns here, but it hasn't moved to that great of an extent. So being a little bit more conservative now, I think we might see it test 109.76 before bouncing up. Still a very good 50 pip profit towards the upside. That is given that we see the US dollar strength being applied with non-farm payrolls towards the end of the week. Moving on to the euro yen, this is actually quite interesting. I've been sharing with our trading team, our guys here on the call, I think on the club platform as well. A lot of currency pairs now are sitting at major resistance levels or major support levels. For the euro yen here, it's tested. You can see those multiple tails testing that 130.45 level, and it seems like it's rejecting that level as well. So I think what we could see here is if we do see the dollar gaining strength, that could actually imply or relate to the euro dollar pulling downwards. And as the euro dollar pulls downwards, we could actually see that drag the euro yen lower. We could actually see it drag the euro yen lower. What you could be looking for is selling opportunities below 130. You could be looking at a 30-40 pip stop loss for a very good 90 pip take profit level. 1:3 risk reward ratio towards the downside, with the idea that we're going to see some US dollar strength dragging the euro down, in turn dragging the euro yen down, with the way the euro yen on the H4 time frame is reacting to this 130.45 resistance level. Given that if it keeps rejecting that level, we could see that retracement back down. Perfect trade would be for it to move 90 pips downwards, but you could have a check. You could check this trade at halfway at about 45 pips as it comes within this consolidation area here, deciding whether you still want to hold on to that trade or whether you want to get out early. So this is a trade that you could have a two-part decision, one halfway through at 45, or leave it to take profit at 90 to see whether it will get there. So that's the euro yen on the H4 time frame. Moving on to the pound yen, look at that. As I said, a lot of things sitting at resistance or support levels. The last time I said that it was going to come down off that 151.38 level. It came down a little bit before retracing back up again. At this point, I would like to say that it's going to come lower. I would like to say that it's going to come lower, break below this point and test lower. But I think that the pound yen seems to have been finding that base sitting right across. I would say that it's possibly going to come down, test a little bit lower before possibly going back up again. So this is where you would have to be very careful. Why I'd say that is because once it breaks lower, it could look very enticing to sell it downwards, but it could be a false break. It could be breaking lower slightly before tracking back up again. So this is where you need to be, a bit less emotion in your trading. Follow the process. Watch the way it reacts to this 151.38 level for it to possibly break higher up towards that 153.74. But that's a very big move. I think that would reach that target, but in many different segments.